Go.
Welcome to Academic Market Insights. This week, we are going to cover a super exciting topic, VIX in the 20s. And this is in response to our number one volatility fan. I love volatility. That would be Carly, as we're going to be looking at what's been happening in the market recently because the VIX is trading in the 20s, and that's something that's been the trend for the long run. And let's face it, there's a lot of uncertainty right now, particularly around economic policy that's being developed. So this is a very exciting time period, and we're very excited to hear from Dr. Rowe, our resident VIX expert, on what's been happening. Now, if you like this show, please hit like, and if you haven't already done so, please hit subscribe. We are very open to constructive criticism and happy to have it. And again, if you have a suggestion, we are very open to suggestions. This program, again, today's topic was from one of our top volatility fans, and which is why we're digging into this. And I know I'm excited to find out what the market is, how the market is really reacting to some of these economic policies and some of the whipsaw that we're kind of feeling right now. And I think that's part of the reason why the VIX is in the 20s. So, with all of that, Dr. Rowe, it's time for you.
I'm taking it away. Is there green in that sweater? Because
There,
we're talking on St. Patrick's Day.
we are speaking on
We are
St.
speaking on
Patrick's
St.
Day.
Patrick's Day.
It is,
And
it has a little Celtic sign up here.
that's good enough. All right, you count. So yeah, it just occurred to me as because there's dates on some of the charts I'm getting ready to show. So really, just going to spend the next few minutes talking about VIX as an indicator, and when it's at elevated levels, maybe what we want to look at with respect to getting an all clear with respect to the equity market, maybe resuming an uptrend. Before I get going, I just make sure everybody understands what CBOE Volatility Index is, or VIX is. It's a consistent measure of 30-day expected volatility using S&P 500 index option pricing. And typically, when when folks are concerned about the equity markets and they don't have enough protection on, they may be willing to pay higher prices to insure against downside in the equity market. And that usually coincides with a sell-off in the equity market. People buying insurance only when they think they need it. And that makes it more expensive. Because of that, we've gotten the term, the fear index. And on the next chart, you can see, and this is basically the most recent 12 months leading up to March 14th, the Friday before St. Patrick's Day in 2025. And we've got these volatility spikes. We had VIX run up in the summer of 2024, VIX run up to almost 40. That was early August, actually, where we got a concerning employment number, and then things carried through to Europe. But also something I'm going to talk about a little bit, and it's not very easy to see here, but you can see that VIX spiked up. The S&P was low. S&P was basically tested that low, but when it tested that low, VIX was already at lower levels as well. And what you want out of the S&P 500 and VIX when you're looking at them together and making trading decisions for the S&P 500 using them together is you want them trending in the same direction. And if this guy suddenly is trending down and this one trending down when this one's flat, then it might be an indication that we're getting ready to get a reversal in the S&P 500. More often than not, when we've had significant sell-off in the S&P 500, VIX starts coming down before the S&P 500 starts going up, and that shows up in time frames from 5 minutes to daily charts. We're going to stick with daily today. So what we know about, what you need to know here is, unlike the S&P 500, VIX is not tradable. You can't replicate spot VIX in a portfolio. And VIX futures pricing can deviate from the spot index, and often does. Typically, it's at a premium to the futures are at a premium to the index, but at times the futures may be at a discount to the index, and in those, I don't want to say rare because it's about 20% of the time, but in those cases, we pay very close attention to the relationship between the two, and start to get a feel for when is the index going to work its way back down to the future, which would coincide with a rally in the S&P 500. Yes, Dr. A.
So I have a quick question. You had commented that the spot VIX is not tradable. Is the futures VIX tradable? And is it a
Oh, yeah.
popular product to trade?
VIX futures are tradable, and on a dollar basis, it's probably the most active listed method of trading volatility on a day-over-day basis. I say that I'd have to look at the volume on the options. The options have a multiplier of 100, while the futures have a multiplier of 1,000. So on a dollar basis, I think the futures do better than the options each day. And they are, I mean, that it's a very liquid market. It's one of those,
Okay.
there not that many futures markets out there that that have a consistent one tick spread. VIX futures are one of those that have a consistent one tick spread. You can, if you're an individual or even a moderately sized institution, I think you can get executed with screen prices no problem with VIX.
And for our number one fan, what is a one tick spread?
One tick spread on VIX is a nickel, but the multiplier for VIX is 1,000. So each price move in a VIX future is $50.
Okay.
That's what a tick is. There are many VIX futures that don't trade particularly, that don't have nearly the liquidity as the big VIX futures, which is interesting. It's the other way around in a lot of markets, and I think that's because there's not a huge retail participation in VIX futures contracts, and also the big VIX future with VIX at 20 is a $20,000 contract. The mini is a $2,000 contract. That actually, a $2,000 contract commissions and the spread starts to get in there and mess up your any profitability for any trades. So right here. All right. So I mentioned the trend thing, and the VIX is an indicator. And we're really talking about VIX as an indicator because VIX gets a lot more attention when it's up in the 20s. We got our question from Carly because VIX was at elevated levels. What is VIX telling me to do right now? Well, and Monday morning quarterbacking in hindsight is 2020, but I am going to show a couple of instances here where the S&P 500 is right here. It's making a little bit of a low, just another low, but the second move down, first move down is pretty significant. Got a nice rally in VIX there. The next day, the S&P 500 was slightly lower and VIX dumped down. Pretty nice indication that for the next few days at least, it might be safe to buy stocks. Another one, and this coincides with the timing of this video, is right here. And this is through, we're speaking again on March 17th. This is through Friday, March 14th. And Friday, March 14th, we had a really nice rally in the equity market. That's what you can see by the red line up there. And you can see VIX was down dramatically. But note for about a week leading up to, we got a big sell-off, and we got VIX moving up to around 25 or so. And then after that one sell-off, VIX started to trend lower, even though the S&P 500 was trending lower slowly. And you'd be okay if you'd bought that second day where they were trending down together. But this counter, when they're not moving in the same direction, that's usually an indication that you're going to see a trend change in the S&P 500. And I'll give you, I I hate that I'm actually going to really just deviate here for a second because I want to show the opposite of this. And the opposite of this is right here, where the S&P 500 is working its way higher, and you can see the S&P is working its way higher, and VIX stops going down. And then you see a turn after that right there. You start to see the S&P turn lower. So it does work in both directions. I was only showing a couple of instances where the S&P was trending down and VIX started trending lower with it. It's often been an early indicator when you see VIX working its way higher or not making new lows when the S&P 500 is making new highs. That's often an indication that we might be close to the end of an uptrend as well. So it works both ways. You just want to see both of them trending in the same direction together. There have been instances, or I'm sorry, opposite directions. You want to see them trending in opposite directions. They have trended in the same direction for weeks at a time in the past. And eventually that catches up with the index. The Volmageddon situation is the one that really comes to mind, where we had 5 or 6 weeks of the S&P 500 and VIX both moving up together, and then we got a dramatic sell-off. It's like people in the financial world knew something was getting ready to happen, and they weren't sharing what was going to happen. So, and this is what we were touching on just a minute ago, and this is the March VIX future versus spot VIX, and typically we see the futures contract at a premium or higher than the spot index. Now, and the thinking behind that is, and you can see over here on the left part of this slide, the idea with VIX at 15 or so here is if you're going to be short volatility, you deserve some sort of a risk premium. And that's what that spread between the VIX future at the very beginning of this chart and spot VIX, that's what it represents. And when we get then on the opposite side of things, when we get a volatility spike or volatility event, which is what we have over the course of a few days here, and which got VIX up as high as 28, the front month future, which settles into a calculation of VIX, but can't be traded in coincidence with VIX right now, may indicate that the market believes VIX will be lower between now and settlement. And that's what this chart's kind of telling you, that the attitude of the volatility markets has been. Well, we all know what it takes in a normal market for VIX to go down, and that's for the S&P 500 to go up. So I often say, and you know, this might have been part of the sales pitch when I worked for SIBO around trying to get more and more people to pay attention to VIX. But I don't say things I don't truly believe. And my belief is that even if you're trading equities and you're basing some of what you do off of the S&P 500, at minimum, you ought to have VIX on your screen next to your S&P 500 quote. And you probably ought to have today, the March and the April futures contracts. March future expires in just a couple of days, and then have the front 2-month futures. But I would have the VIX futures on my screen along with the VIX index, even if I never traded any of those things, because I think they give you insight into what people who put money to work based on an outlook on volatility, what they're actually doing. And this right here is a nice indication last week, and they ended up being in line with each other on Thursday, and then we got that really nice rally on Friday. So the narrowing of that spread is something that you want to keep an eye on as well. And if VIX goes up, like right here, VIX initially went up, and the March future didn't really go up much with it, but didn't stay at a discount either. So, you know, when you first get these VIX moves, you want to look at what the future is doing relative to the index. And if the future is in line with the index or still at a premium with VIX moving up, that's an indication that maybe you want to stay out of the way as far as trying to add to stock positions.
And I like that you had mentioned, having these up on the screen so you can see what's happening, especially since we're considering the fact that most traders in the VIX market are going to be professional or institutional traders as opposed to retail traders. So we're having a maybe even deeper sense of what's perhaps truly going on in the market as opposed to retail traders who are almost trading on rumors and feelings as opposed to a deeper pulse.
And I think you use the word feelings, which gets into my second favorite area, which is behavioral finance. I do, this thing is called the fear index, but I do think it's a good quantification of overall concern in the equity markets, because the higher, when VIX is elevated, that really is just a quantification of the expense of insurance on an equity portfolio. And the more expensive something is, I mean, that just comes down to pure economics.
Mhm.
So VIX is an indicator. They trend in opposite directions the majority of trading days. I'd say about 80. Depending on the time frame, the correlation between the two is usually between minus 0.75 and minus 0.8. It's been very consistent over longer periods of time, and that means like a year plus. But I ran it at the end of 2024 for the last 25 years, and I think every output was between 0.75 and 0.8. So that part's consistent. They trend together. They trend in opposite directions the majority of the time. They do trend together periodically. That does not mean that VIX is broken. One of my best anecdotal indicators when I worked for SIBO was if the press started calling and asking what was wrong with VIX. In the 2 weeks leading up to Volmageddon, I fielded more of those calls with the corporate communications department than I probably did my whole time there. So that, and again, that's one of those great hindsight things. Oh, well, maybe I should have been paying more attention to the markets. When they trend together, it can be a signal for a trend change in S&P 500. It works in both directions. It tends to work more quickly when the S&P 500 has sold off than when the S&P 500 is moving higher. They can trend together to the upside for a week or two. And we don't get some sort of volatility event, or they don't fall back into some sort of normalcy. But when you see the S&P 500 come under pressure, VIX tends to spike up and then change direction fairly quickly. And that's always a good buy on weakness signal, or something that gives you a little confidence on buying on weakness. And as I mentioned, using VIX as a market indicator, paying attention to market volatility and some of the insights it might give you. At minimum, I would have the front month future right next to that spot VIX on my screen. The front month future right now is officially March, but it expires on March 19th. And when we hit expiration week, on my screen, I've already switched to April as the front month. So I always consider that today's the day that I make the new future the front month, because with only a couple of days left, the future that expires on Wednesday is basically just moving in line with VIX. So I don't think it's telling us a whole lot at this point. So questions from Dr. A.
No, I feel like this is really good. I guess the more topical question would be, given that the economic policies it feels like they're widely changing. How do you see VIX responding to some of those things? Maybe in the next month, maybe in the next 2 months, again, because it almost feels that on a daily basis, something very new and very dramatic is happening. And what should we expect to see within the VIX?
You're actually getting me on so you made me pull up the markets. So this is almost a topic for a completely different video. But what we're looking at here is we're looking at the spot VIX and the VIX futures prices. I'd really like to make this chart big, but I don't know how. So the March future is at 2078. all of these futures are within a 75-cent range and have a 20 handle. That is typically the curve is either in backwardation or contango. This guy is flat. And when we see a flat, when the VIX curve is flat, I have always equated that with a lot of uncertainty. And I think this is a quantification of what we see going on every day in the news cycle, where we're hearing new conflict with so and so. We're going to do tariffs with these guys. Well, now we're getting along with these guys, and it's a lot of day-to-day uncertainty. And I think that's what I think that's what the VIX term structure is showing us right now. Is that I know that doesn't do a whole lot of people any good, because I'm not saying VIX is telling us to buy or VIX is telling us to sell. There's nothing wrong with being on the sidelines, and I think that's what VIX is telling you, that we're not out of the woods as far as some volatility events go, and we'll probably have a better buying opportunity than where we're at right now with the S&P 500, because typically big uncertainty does not end well for the markets.
And no, I think that's great. Thank you. And I was asking on behalf of our #1 fan who is concerned about all of these policies and really trying to understand how is the market responding to this. And this person isn't necessarily actively involved in the markets on a daily basis, but they're very concerned with the impact for some of these economic policy changes, especially since everything seems to be so reactionary. So we've got retaliation from different points of view. And again, to your point, that just creates so much more uncertainty.
And it's everybody I talk to professional in the markets that are focused on the day to day, they're not reacting to anything that's said. They're just reacting to things that actually are implemented or done.
Right.
Which I think has been it's not desirable, but I think it's just the best approach that anybody can have. So
Absolutely.
in the current environment. So we'll figure out long term if all these major changes work out or not.
Right. And what sticks and what doesn't stick.
Yeah, what's going to stick? So there. So all right, you want to take us home, or you want me to take us home?
I'll take us home.
Okay,
If
you're better at
you
it.
enjoyed this video, please hit like, please hit subscribe. We thoroughly enjoyed talking about VIX in the 20s. We're happy to do this. We're again open to very constructive criticism. We love to hear suggestions. We've been getting good topic suggestions for the last couple of weeks, which has been just a lot of fun. So keep coming with questions and we will be happy to keep providing answers. With that, we wish you a happy St. Patrick's Day, and we wish you lots of uncertainty in the market. Is that something we can wish? Maybe we can wish for an ease of uncertainty in the market. Um, so thank you, Dr. Rowe. And again, my name is Larissa Adamiec. Thank you.